We're in there now. They're like swimwear. We're live on Facebook, LinkedIn, YouTube. Welcome, everybody. Nuns, a night of the good life. As always, excited to be here with you. We got three of us on Facebook, LinkedIn, YouTube, but we got to get Stu over here Kabi over here on Instagram. Here he comes, and we're good, gentlemen.
Drum roll.
And
And
there
there
he is.
Oh!
Hey,
Could be with the
with the
entrances
entrances
and the
and the
exits.
exits.
Always.
we're getting a little feedback,
How's that?
still a little. Probably gonna have to take it all the way down because I still hear myself.
Swear I'm all the way down, man.
It's all good. We'll figure it out. But for everybody that's watching, we appreciate having you on. Again, another Wednesday night that we get a chance to be here with you, chatting about health, wealth, mindset, all the great things that'll help you design the life that you want. So tonight we're talking about wealth building. Oh, by the way, gentlemen, how are you guys doing? I didn't even say hello.
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 Doing great.
Good. We just had a whole pregame, and if you guys aren't tapped in to the pregame, the hour before, we do 1 hour live on Instagram where we just are chopping it up and getting a chance to talk about whatever is going on in our lives at that moment or whatever's on our mind. One of the things that we did talk about that I want to bring up right now is what we're preparing for in 2022. So because this is something that we've been doing, we've been putting on now. This is for 45 weeks. We want to get a chance to share more value with you and add more value to you guys. And so we decided to come together and do an actual event coming up in January of 2022, specifically January 7th, 29th. There we go.
Ninth.
January 9th, 2022. We are coming to you guys for a growth event. So we're going to get you more information and tell you more about it. But we're going to have all the ways that you can get connected to us. We have a new Facebook group that's out that we want you guys to be a part of our community so we can keep sharing all of these tips, value things with you as we move into the next year. So, gentlemen, anything to touch on when it comes to the event? You excited about it? What do you want to tell people about?
Hey, tap in. What I want to know is we have a game plan, but what do you want to hear? What do you want to tap into? Is it wealth building, crypto, gold, stocks? Is it wealth, how to lose weight, how to live long life, how to clear up your gut so you get in consciousness, how to gain muscle, how to tap in? Is it mindset, right? Do you have anxiety, depression? Do you beat up on yourself a lot? Do you want to increase your productivity? Do you da 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 da? What do you want so that we can tailor that to you? We can tailor our message to you. And you know what? If we don't know how to get it there, God darn it, we're going to do the work to make sure that we bring hot fire.
Hot fire.
Hot fire in there. What are you going to tell them, Stu?
I love how you covered all the different areas, man. I think from my perspective on the mindset side, like as I was saying in the pregame, we've covered so many different types of things in all three of these categories. And for those that have been watching for a while, like I definitely am the mindset, kind of like happiness, just general headspace type individual on the group. And man, like our goal and mine specifically on the mindset side is to boil down everything we've covered over the last 45 episodes, tonight included, and make it so you have a solid plan and foundation to like kick off 2022 to the best of your ability. We all want to start the year crushing it. Everybody does. You hear about it all the time. How do you maintain that momentum? How do you not get behind? How do you recover if you do slip up? These are some of the things we're going to go over. How are you going to process fear of failure? How are you going to process something that you seem to be failure? Like at the end of the day, we're going to do it all. We're going to put as much as we can into this and Kabir and Chris have nailed it. Like, if you want something specific, let us know. A lot of y'all been watching for a long time. John, Dana, Aaron, like, we've got some very consistent people here. So if there are individuals out there, Big Rob, like, if there are individuals out there that want to get something more specific, like, speak up. Now's the time, because by the time Sunday, January 9th comes around, we're going to kick it. It's going to be great.
It's awesome. It's awesome. It's gonna be an amazing day. We're putting together a lot of information and good stuff for you guys. We're doing a lot of behind the scenes things. We're gonna have a VIP package where you get a little bit extra stuff if you want to get more connected to us or have more access to us. We're going to be able to do that for you as well. But again, this is just for you to get the value. That's why we do this show. We do this show for you to get value and start to be able to get to the place you want to in life. So either way, gentlemen, tonight we're talking about money. It's my night. We get to talk money. Normally, the last time we talked money, could be you weren't here. So I got a chance to say this is the most important thing, the most important topic. I didn't have to compete with the health side, but we understand where we sit, right? We're right there, neck and neck. But anyway,
we're gonna talk about that later. We'll let you have tonight.
I'll at least take tonight. Raywin, what's up, man? Good to see you, Ray. Glad you can make it onto the live. But yeah, tonight, wealth building. Tonight is going to be talking about one of the things that you've probably been hearing a lot about. And I'll often say that in 2020, if there's anything that we took or that really shifted in 2020 was people's awareness of investing. Would you guys agree with that? Would you guys say, and I don't know if you guys are as tapped into the space as I am, but I've seen it. 2020, something shifted with investing, like the pandemic hit and people kind of left their jobs or had to do, right, make different maneuvers. And I think investing got very popular over the past year and a half, 2 years. What would you guys say to that? Would you say that's an accurate statement?
Absolutely. I mean, I look back to, so many people that lost their jobs, potentially had to go on unemployment. And I know some of these individuals that took all of that time and just started pouring time and energy into learning how to day trade. We've seen crypto blow up this year in a couple of different categories, which really brought so much attention to this. Like before, man, there was just Bitcoin. Now there's all kinds of stuff. So you got people, I've met some, like just the other night, that have 6 digits in their bank account because they put 1,000 into crypto. Like, what kind of crazy ROI is that? That's out of this world. And it used to be investing was like an old man's game, like, the 401k and the matching, and you do the bare minimum and cool, I've invested, I'm good. And I think now people are beginning to see that there is a lot more ROI out there than initially expected when it comes to investing.
That's good, man. That's good. Something you said that's really important. New school investing versus old school investing, like you said, right? It used to be this old man's, like, kind of, just sock it away and just kind of, put it aside. And it became something that people kind of are excited about now, which also goes a bit to why a lot of people, like financial professionals, push back against kind of the meme coins or when AMC and those types of stocks start to grow. It's a little bit opposite from what it's funny, I felt like I said this before. It actually is a little bit opposite from what the traditional traders or the traditional people actually would do. So that new school versus old school thing is important. Kabir, what did you add, man? Would you think that that's similar, that it's been heightened over the past couple years?
I guess so. Yeah. I would say this. I think maybe it's the crowd that I'm around. I don't think it's true for the crowd that I'm around, because we lions. We've been on this, right? We've been on this. So, if I'm around you, You most likely been looking at this for a while. The Johns of the world, the Robs of the world, they're very interested. They're tapped in, right? But I would definitely say for the, like you said, the younger generation or the younger crew or whatever. And I don't even know. Am I not in that anymore?
You're not, sir.
I'm not in that anymore. I'm not in that anymore, huh? Oh, see, when you keep the body young, right? Sometimes you can fool yourself. You think you're still in there, but yeah, you know, to see what one thing Stu said that hit was to see people who have made investments into this crypto space and are walking around with Ferraris and moving to Puerto Rico to try to avoid these here taxes and whatnot. That's probably what I see as new. And to see that type of return. And, you know, for me, and Chris, I hope you'll dive into this a little bit, but I think there's definitely a difference between traders and investors. Right? There's definitely a difference between traders and investors. And I've seen a lot of traders that have done well. But I also believe that with that is going to come a lot of traders that are going to get burnt at some point in time. So, you know, I'll say, yeah, people are, and I'll say what I've noticed is this is what I've noticed. This is the change that I've noticed that I can step on. It's a shift in consciousness. It's a shift in like people that are waking up and saying, whoa, what am I doing? This like, wait, I didn't even really want to go get this degree at this college. My parents just like pushed me to do it. Now I'm working this job and then this pandemic hits. And all of a sudden, you know, young folks like low 20s are thinking, I don't really want to do this anymore. How can I exit the system faster? That's the shift that I have noticed. How can I exit the system faster? And for a lot of folks, they're getting grabbed by the cryptos of the world, right, of whatnot. But I've definitely also seen some folks that have utilized old school methods to still establish themselves as well. So I don't think those methods are dead at all. But that's what I've noticed, a shift in consciousness. Like, what am I? This doesn't make sense to me. This doesn't make sense to me, right? That's what I've noticed.
That's really good, man. That's really good. A shift in consciousness, a shift in awareness, exiting the system. And I think that coupled, I agree 1,000%. And I would add to it, I think coupling that with the ease of investing now, the ability to tap into ways to grow your money faster than what maybe a previous generation knew is what has started to shift. Yes, we can talk the crypto side because tonight I was going to talk stocks. We can talk some of the crypto stuff, right? But really just understanding that this word investing and what's really happening out there could be, you happen to say it, right? That there is a difference between traders and investors and what that difference is and what we're seeing, right? So I want to dive into that a little bit right now and just really start on the basis of, well, why do people choose the stock market to invest? Why not choose to invest money in other places? Why do people choose the stock market? And then we'll talk about why people kind of choose crypto. But for the stock market has been traditionally the place that people have grown their money, right? In the stock market, it's always funny. You guys know, I don't know whether to start at the 101 level. Like, do you understand what the stock market is, right? And what it's made up of, and what is the NASDAQ and the Dow Jones and S&P 500. Sometimes I want to start there, but I didn't think I wanted to go there tonight. So hopefully the people that are listening understand this is a 202 or 303 level financial conversation about stock market or investing. But why do people, again, use the stock market to invest? Because traditionally it's been the place that you can get the best returns, you can get great gains, you can put your money over there and basically bet on some companies that they're going to grow, that the value of their business is going to grow. And because that was the traditional way of us really going about doing this investing, it became popular. It became the thing that then Wall Street got built from. Or, Wall Street really got built off because there was the opportunity to invest in the stock market, invest in other companies and those types of things. A lot of people started to because they found it an easy place to get returns. We kind of adapted those same things. The ways in which we're choosing stocks or choosing is what I believe changed over at least the past 3 or 4 years or so. What we're starting to see now is the traditional way that people would invest is buy it. Okay, if you're familiar with that strategy, you're buying a stock, you're buying a piece of a company, and you're holding it, right? And you're holding that because over time, the value of that will go up. Over time, the value, people say you can bet on the U.S. economy, or you can bet on the companies in the U.S., which is changing. That's why, again, we're seeing this shift. But typically they used to say you could just bank on the companies that are here in the United States. And over time, that they're going to grow up and go up in value. So I'm getting a bunch of feedback again. If that's
Not hearing it on my end.
no, that's weird. But anyway,
real quick, I wanted to jump in. So you clarify that this is a bit more of a 202, 303 thing.
sure.
Go ahead, guys. If anything seems confusing, or if there's something Chris mentions or any of us that doesn't really like click with you, maybe it's more of a one-on-one thing. Go ahead and ask. We got a question here from Aquemini. So really anybody out there, you got a question, like go ahead and drop it in here. Like we're here for engagement, and you can always reach out to Chris and stuff at a different time.
Absolutely. Read that question for me, Stu, if you can find it on there.
Yeah. So
Stu, before you read that question, I think it is important that you do ask, and we'll read this question here in a bit, because one of my pet peeves is that I feel like a lot of people pretend. Okay. A lot of people pretend to understand what stocks are. A lot of people pretend to understand what trading are. Why? Because it's like, it's uncool. It's like you don't invest. It's water cooler talk. All right. It's water cooler talk. Oh yeah. What stocks are you in, bro? What stocks are you? And this is really interesting. I've actually noticed that for people who have money and people who don't have money. I've noticed that for both. I literally sat at tables with millionaires, right? Who were just like having a pissing match about what stocks they're investing in. And at the end of the day, I knew them well enough to know none of them knew what the fuck they were talking about, right? So it's incredibly important not to skip. And me, guys, I keep it 100. And I'm not saying I know everything, but I know enough to know that they were bullshitting, right? So if you don't know, don't feel like you have to know or you should have known. This wasn't taught to us. And if it was taught to us, it was taught to us on a surface level that really didn't stick at all or make any sense, right? Maybe you can define, it's kind of like people talking about carbs, proteins, and fats. They have no freaking idea what they're talking about, but they'll still throw that in. Oh, y'all cut out carbs. Yeah. I mean, I've been feeling so much better since I cut out carbs. They couldn't even tell you what a carb is. Okay. So I think it's incredibly important to highlight that, because I think this happens a lot in this space. Go ahead.
Bro, I appreciate that first and foremost, because that's something that people need to understand. We run off of this thesis that no one's ever taught us money. No one's ever taught us this stuff. So it doesn't matter if you feel like your question's not on par, or, you think you'll get laughed at. None of that matters, because we all start at a similar spot. Nobody really teaches us this stuff. So absolutely, what could be said is 100% correct. Bring up these things if you have questions, and I will start at the bottom. Right, I'll start at that level that's easy for people to understand, but ask the question. Ask the question. I think it's huge. Cool. I think sums up Stu.
So the question was, do you usually start? I think it's, do you usually start investing in mutual funds that mirror the S&P, or would you recommend taking a different path?
Unfortunately, Aquemini's.
So the question, Stu, was, I'll read it here. Do you usually start investing in mutual funds that mirror the S&P, or would you recommend taking a different path?
Good question. And this is always what's fun about being able to dive in, and because so let me preface this by saying everyone's financial life is a bit different, and everyone has their own financial path that they're going to take. So there's not one financial vehicle that's good for everyone. There's not one actual piece of advice that's good for everyone, right? It's all gonna depend. But in general, just to kind of answer that question a bit, as far as mutual funds or index funds or ETFs, that mirror the market are always a good place to start if you do not understand the stocks or the businesses that you're purchasing, right? Anytime you purchase an individual stock, that's like purchasing an individual company. If you purchased a McDonald's stock, if you purchased Meta stock, which is Facebook, if you purchase any stock, you're buying a piece of that company. Okay, you're buying a piece of that company, and so if you don't know that company well, then it might not make sense to buy that company. So what you can do is you can buy the entire market, the entire, let's say, S&P 500, which is the top 500 companies here in this here in the Americas, in our market, right? Top 500 companies. You can just take something that mirrors that market, right? You can also do that in different segments. You can take the index or the segment of healthcare and say, hey, I just believe in these healthcare companies, or I just believe in these technology companies. And you can kind of hedge your bets that way, because you're not just betting on one specific business or one specific company. You're actually betting on the entire industry, so to speak. So for some people, that's a great way to start, because you don't actually, and not even just start, to keep your money there, because you actually don't have to think about it as much. And you can still get the gains or get the value of having your money in the stock market. So is it right for everyone? No. But that could be a very good place for people to start and park their money a bit. So great question.
I second that big time. Like I am not an expert in stocks whatsoever, but just having money go from paychecks or whatever else into mutual funds, whether they're domestic or international, man, you just trust the overall flow of that group of organizations without having to know all the details. You just trust overall growth. And I amassed a decent amount of wealth from that. So yeah, I definitely second what you're saying. But to your point, there is no one financial vehicle. It really depends.
That's right. It definitely does. Check and see if there was another question on Instagram.
Yeah, there is. There's Exposure with Light asks, so many stores are claiming they don't have coins. They want you to have exact or pay with card. Are they trying to get rid of coins?
Great question. It's funny because on our pregame, we talked about what's happening in the global landscape of money and health, right? Health and wealth. I don't know specifically to answer that question, Kim. I don't know if they're trying to not print coins, but what I will tell you is fiat currency, meaning the currencies that people are using right now, that countries are printing and using, is losing value, especially the US dollar, and especially, right, what's happening with the printing of money. It might not be in their financial best interest to keep printing coins and things of that nature, because the actual US dollar is not strong. So there's probably something with that. I'm not quite sure. I don't know.
Chris, I'm not a financial guy, so I'm going to go out on a limb and say yes. All right, and let me tell you why. Let me tell you why. Because printing of pennies, dimes, quarters, and what is actually more expensive than what they're worth. Okay, so why would they do that when they can just send digital dollars onto the balance sheets of their members? Why would they do that? Digital dollars a lot cheaper, right? To send trillions and trillions of dollars over across just by a push of a button, rather than actually printing the physical objects, which actually requires a little bit of energy, and it's going to cost a little bit more. When the dollar started, let's say 1972, somewhere in there up until now, the dollar started at a full buck, right? And now we're here at what, like 3 cents, 4 cents, somewhere in there. Guys, that's a pretty big fall, right? So that's a pretty big fall. How much does it cost me to actually print that? Like literally put it in your hand versus me just pushing a button and going from there. So, hey, I wasn't in that meeting, neither were you. I think putting 1 and 2 together, it's not a bad idea to get rid of those coins.
You're probably right. You're probably right. So thank you for those questions. We had one other question came in here on Facebook from Aaron. He said,
My God.
He said, what's the best course of action for a person who could possibly allocate $500 to $1,000 to start in the stock market? Good. I'm glad you asked that question up front. I was going to address it on the back end, but I'll address it up front because you asked the question, Aaron.
We did not plant him, guys. We did not plant him.
We did not. We did not.
He's a real person.
And you'll hear this. You'll hear this answer spout by a lot of financial professionals, but it really is the truth, right? First and foremost, you've got to make sure that you have your financial foundation in place. Before we start thinking about investing and throwing money, small bits of money in places, you really want to be making sure that you have great cash flow, that you have, a good stream of income coming in, that you have short-term savings, and that your debt is manageable, or you're out of debt. You want to focus on those things. And then if you have $500 to $1,000, you should invest in education. You should invest in some form of education, right? This is what you need in order to become an investor. Again, at today's show, of being a speculative trader, actually being someone that's doing this for the long haul, for your lifetime, to continue to grow wealth. It's different. I think who did I see this from? I saw some post somewhere that basically said that it's an unpopular truth. If you have less than $10,000, it really doesn't matter where you invest your money. You should actually be paying attention to raising your income, building a great savings habit, and getting yourself out of debt. You really want to start growing your money or optimizing your investments after you've built some form of a bank or some form of a cushion around. So after you have, or you're taking time to build that cushion, you're also going to then want to start educating yourself about what stocks are, what cryptocurrency is. You can't go into investments blind. If you don't understand this stuff, then don't put any money there. That's called gambling. And there's a big difference between gambling and investing. But if you don't understand, hey, I understand this stock, I understand what an ETF is, I understand an index fund, I understand cryptocurrency or what the blockchain is. If you don't understand these things, don't allocate any dollars to it. Allocate dollars to learning. Like Dana said, doesn't mean go back to school. It just means invest in your learning, right? Invest in your education. Then you're not gambling.
That's right. That's right. Chris, I don't think you can emphasize that enough. I don't think you can emphasize that enough. And I'm saying this not from up here, but shoulder to shoulder, right? I used to work for a fintech company, work directly with multiple investors, just normal day-to-day investors. I'll talk to about 100 of them a day, right? Day to day, just bam, 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 bam. And I can't tell you how many people called in trying to make investments in products that they did not understand at all. And all they had was $1,000 to their name. I'm talking about when all was said and done, they had $1,000 and they needed that $1,000 if anything was supposed to happen. And I was not allowed to tell them, hey, maybe this isn't the product for you. I had to listen and say, well, would you like product A, B, C, or D? All right. And hence why I left, because after a while, they're not going to agree with my spirit. So I think and this goes in my earlier comment about this just being a pissing contest sometimes with people, right? An ego contest, where it's like people are doing things they have no business doing. And it's not because you don't deserve it. It's not because you're not good enough. It's because you're just not ready yet. You don't go to the gym and start benching 350 right away, right? You start at a particular level, and then you progressively go over. But there's so many people. I hear these conversations all the time who are like talking about investing like $500,000 when they can't even pay for lunch. And it's insane. It's absolutely insane to be doing that. Right. So, yeah, I think you can't emphasize that enough.
Education is the key. You got to understand and learn about where you're going to put that money. And so even if that takes you a few years to study, like Kim, you're saying you're studying, that's good. Learn this stuff. If you can just take time to study, there's no rush to go off and invest money in something that you don't know. You're more likely to lose it. And so that back to this conversation about investing, I want you guys to have the mindset of investing. I don't want you to have the mindset of a gambler, a mindset of someone that's just trying to come up quickly, because that's how we lose money. That's how we start losing money. So the ways that now you want to start looking at, again, the stock market versus cryptocurrency, where you're choosing to put this money is where you have a deeper knowledge. If you start getting knowledge about the stock market, what you should start looking into is things like trading. There's a difference between trading and investing. And Kabir, you wanted me to talk a little bit about it, so I'll talk a little bit about it right now. Okay, trading. What does it mean to be a stock trader, or to just be a trader of the markets? Well, normally you're going to do something called technical analysis. Normally you're going to be looking at charts and graphs. If you've ever seen a lot of financial type charts or stock charts, sometimes they call them candlestick charts. If you start looking at these, they're going to show you patterns of how the market moves, and very similar to what you can do in many different industries. But history predicts the future, right? So if you can look at the historic trends of certain things in the market, you can start to predict what's going to happen. When you become a trader, that becomes where you get your knowledge base, and you start trading different stocks according to what that chart says. If you know something's at a low, and we all know the idea or the philosophy, what, buy low, sell high, right? Buy low, sell high. So understanding that if you buy something and it's at a relatively low price, and you can tell by the charts that, hey, this is probably going to go up, and when it gets up, this is going to be about the place that it stops, then you know when to sell it. You can sell it for a profit, for a gain. Okay? That is a typical or basic way that people trade or become traders in the market. Now, there's other ways of also trading the market. Options gets a little bit more complicated, a little bit more technical, but basically you're not buying that actual stock. You're just buying the ability to buy that stock. You're just buying an option to be able to. And because of that, the way that you can trade those options is you can start trading them if you believe a stock will go up. That's what you're trading. You're saying, hey, I believe in the future this stock, this company is going to have less value, or the stock is going to go down, and that's what I'm betting on. So I can now make money just by being able to make the proper bet on that stock. That's how you start trading. And again, a lot of this stuff you need knowledge. I'm just going over like a top line you to understand that these things are out there. But if you really want to get good and make money in it, because a lot of people do make money in it, it takes knowledge, it takes education. 10 hours, 15 hours of just studying, of going on YouTube, right? Going on YouTube, finding people that understand this. I'll give you guys one of the greatest resources, Investopedia.com. Aaron put this question in here that said, what education program is the best? Where would he begin? That's a great place to begin. Investopedia.com. Investopedia.com. If you go on there, it can answer any question that you have about investing, about topics of money. And they've branched out so much that they have now e-learning courses, like virtual learning courses. So if you want to learn, and it's free, guys, it's free. It's a free resource. If you want to go on there and start learning about options trading and those types of things, You absolutely can. So Investopedia.com will be a great resource for you guys that are taking in that information. But trading is just one form of of investing. Day trading, you're just looking at the values of stocks going up and down. You're getting in and out quickly. It becomes this specialized knowledge that you have about the way charts move or the way companies are moving. That's trading. Question on that could be, or did you, or did that kind of sum up how you think about trading, or do you think about it differently?
No, I think that's pretty clear. To me, I think people should be aware that it's a highly specialized skill.
Yeah.
Right. And if you want to put in, you emphasize this, if you want to put in the time to learn it, kudos to you. I don't touch it with a 10-foot pole because I don't know what the hell I'm doing. Right. And so I'm not going to fool myself thinking I buy into what we started talking about, to the mutual funds, the ETFs. Right. I bet on the basket, not the eggs in the basket. Right. Because I know generally if it all falls, we're all falling anyway. So whatever. But in terms of the individual trading here and there, because I also know this to be true, or maybe it's not true. You tell me that most traders in the long term are not successful.
That is true. That is a fact. Most traders over time do not make it big. They are not successful because it's a game. You have to actually play and be attentive and get better to the game. This is a stark difference to being a long-term investor, to being an actual investor where you are buying, a lot of times people call them value investors, where you're buying companies or you're buying value that you know will just continue to increase and go up over time, even with ups and downs in the market. You know over time that will appreciate, and you're not just getting in and out of the market just to make a quick hit, right? Just to make a quick profit. People that have that mindset typically long term don't build wealth anyway. You know, Warren Buffett often says building wealth is slow and boring. And the reason why most people don't get it because they want it fast and exciting. And so that's kind of the mindset. Yes, you can make money. This parallels very similar into what's happening right now in the cryptocurrency space, right? Very much so, like you guys said, it's crazy to see somebody make small investments and get, boom, right, 10,000 times their, or their return on investments, 10,000x in a year or in 6 months. It's weird to see that type of stuff because that's not typically what happens. But that's why now so many people are moving into this space, is because they see that is possible and that's what they're chasing. But that's not the wealth building mindset. The wealth building mindset is you need to have a specialized knowledge and do that consistently for long periods of time. The reason why most wealthy people have their money in equities, in the stocks, in private businesses, it's because those are things over time that will continue to appreciate a lot faster than some of the other asset classes. So, but the key is they have a specialized knowledge. You're not going to invest in a business if you don't know anything about business, right? You're not going to do that. Hopefully. Or if you want to be successful, you hopefully wouldn't invest in something that you don't know anything about. Eventually, you got to know that if you want to be successful at investing in anything, you have to know that thing. You have to know that space. Warren Buffett, the reason why I bring him up, by the way, is because he's potentially one of the greatest investors of our time. So whenever we talk investing, you can bring principles from what he's talked about before. And one of the things that he says is if you're going to invest in a stock specifically, you're going to invest in the market, value investing, you need to know that industry first and foremost. You need to understand the industry. You need to understand the financials of that company. And then you also need to understand the management team of that company. If you understand that, then you can make a educated decision on if you should invest in that company or not. If you don't know those things, then it's called passive investing. For everyone that has a 401k or a 403b or something, some company sponsored plan that you put money into. That's called passive investing, because you have no control over that money once you send it into the market, once you send it into your 401k. You really don't have any control over it, nor do you have control over the companies that you're picking in that basket. That's why the companies give you, low risk, medium risk, aggressive, high risk, whatever they tell you in that. You're not really actively investing in those places. So that passive investing for many people is very simple. What the other person that asked, also those index funds, very simple ways to get into the market and start doing it. But if you want to be successful and talk about the real wealth building strategies, you're going to have to do some things differently. Main thing, you're going to want to start thinking about in the stock market, buying and holding. That's how you build wealth. You double down on the things that you believe in, the industries you believe in. If you did choose companies, you would pick a few companies and believe in them, and then believe in them for the long haul. For the long haul. That's the way that you build wealth in the stock market. You do it for the long haul. You set it, you reevaluate your portfolio when things are on a deal, you put more money into it, and you allow that to appreciate for forever, right? Just allow it to keep going. And that's why having this conversation a lot of times when people don't have the money to be able to do that, when the stock market flips over, when we have something that drops in our economy, people have to pull out of that position. They have to pull out of that investment. If you've ever heard anybody say things like, "Oh, I saw the market coming down," or "I saw the crypto coming down, so I just sold it," it's because they actually needed that money, right? That wasn't money that they could actually go invest, because the smartest thing to do is, if it goes down, is to buy more. Because if you believe in it, then you'll be able to accumulate more shares at that time and then allow that to continue to grow. And that is the wealth building formula. You guys seen that? I know we're getting some comments, but have you guys seen any difference or any comments on anything that I just said, guys? Because I said a bunch of stuff in there.
Not at the moment. I think I'm trying to relate back to my own personal experience with this. I mean, I have sold things like 401k and taken the penalty because it felt like the right thing to do at the time, needed the money, whatever. But I think you make a really good point. Like, you really shouldn't be investing money if you think you're going to need it. Like, it really should be money where it's like, this is gone. This is pretty much out of sight, out of mind, unless I decide to move it around in the stock market for a gain. But bringing it back out, especially if it's a retirement account, you will get penalized. So you really have to be careful with that, because if you're aware that you're going to get penalized, then you're basically just throwing away 10% of whatever it is. Right. So you gotta. I think that's a good point you just made. Like, if you're going to put it in the market, like, keep it in the market.
That is the biggest point that I always like to make, because you can put a little bit away, but if you actually need that little bit when you lose your job or when you have a financial hiccup, are you really investing? Are you really having a wealth building mindset, right? We have to start at the 101, and then you can build on it for sure. But you've got to be able to see that if you can't afford to lose that, then don't put it over there, no matter how bad you want to invest.
And Chris, I think you emphasized it earlier, but again, I don't think you can emphasize it enough. And that's an indication that your foundation isn't firm, right? We've all been there. I've sold stocks. I haven't sold out of any 401ks because, well, I'm not. We'll stay away from that. But I've definitely done that. But that's because my foundation wasn't firm, right? When I made those moves. I kick myself all the time. I had a ton of silver, sold it all, right? And it was, and my foundation wasn't firm. If I held on to that silver, it would be sitting real nice right now. I sold a bunch of Bitcoin. I would be sitting real pretty right now, right? My foundation wasn't firm. Again, and if you've done that, don't beat yourself up. Right, you can always rebuild and get back into it, or you learn from those things. Sometimes we've got to feel these things in our gut to learn the lessons. Sometimes we've got to really get it into our body, right? You can hear us talk all the time, you can hear it go all the time, but when you feel it, when it hurts, I wish I held on to that. then you'll start to make you make better decisions moving forward. So foundation being firm and cannot invest. Don't get FOMO. Don't get FOMO. And I'm speaking from personal experience, not from an advisor role or anything, but getting fear of missing out. Oh, the market is crazy right now. The market is insane. You got to get in, right? Cool. Not for me right now. Not for me right now. My foundation isn't firm. My income isn't firm. I'm still in debt. I still have student loans. I still have all this stuff being paid on. I still have all this stuff that's pulling at me, tugging at me, nipping at my feet, right? So I got to get that right first. And when I get that right, brother, I'll be right in there with you. And when I get that right, it's going in automatically, right? 10%, regardless of what happens, is going in. So I think that's the best way to go. You can sleep better at night too.
Can we stop and pause there for a minute? Because that is actually it. That FOMO, that emotional part, that's actually what gets people. That's literally it. It's the fact that people don't stand up and say what you just said, Kabi. Even though they might be thinking it, like, nah, I can't do that. Let me take care of me. Let me do this foundation. Let me get my foundation set. Let me build my savings. People don't say that. When someone says, oh, the market's great, you got to invest in this thing, or did you not get into this coin? And because of that, we have that FOMO, not knowing that the plan that we have for ourselves is the best plan, right? The plan that you have to get your foundation set is the best plan for you. You can let other people be all excited about what they're doing, but understand that, like, you're not missing out on anything. Markets are cyclical. Matter of fact, let me say this to everyone that's listening so you can hear from a financial professional. Markets are cyclical. Even if you did miss out on this one, there will be another one in your lifetime. There's probably going to be another 3 or 4 of them in your lifetime. Markets are cyclical. Things will constantly do this. So even if you feel like you're missing out, don't worry. Just stack your money, pay attention, get some education, and on the next one, then you'll run it up. That's the way it goes. So you should never have fear of missing out of anything, because your time will come. If your foundation is not good first, you may miss out on everything. You may never be prepared to get an opportunity. You may never have a hefty 5-figure or 6-figure investment to take advantage of an opportunity in front of you because you never got your foundation correct. It's a big difference. I know a lot of people that don't have $100,000 in the bank, but would love to, make a, $10,000 investment in something just with all of their money. Just let me just put it all into there. It's like, well, what if that doesn't go through? You don't have any cushion. You don't have anything set aside to protect your income or anything. So these are important points. Could be the emotional side of this, that FOMO, that fear of missing out. That is a big point. And hopefully people are not having that FOMO reaction often.
Yeah, and I this is why I don't go too crazy on the crypto bubble here. Is because I know a lot of people that did just that. The difference is they won this round, right? They won this round, so they think that's the way to go. They took everything they had and put it in it, and they won this round. So they're evangelists for it, right? They couldn't tell. They never read the white papers. They couldn't tell you what it is. They couldn't even tell you what it is, right? But they won this round, and they're telling all their friends because they got that Ferrari, right? And they got that Ferrari. There's a lot of that happening. There's a lot of that happening.
Good markets make average people look like geniuses.
Look like Michael Jordans.
Yeah, for real. And they're just not, right? It's just the way it happens. But what can we say again for everyone that is listening, whether if you're just getting started in this side and you want to understand more about investing in the stock market, like, get your education, build your foundation, and start educating yourself about these areas. Feel free to reach out to me. Feel free to send me a message. If you have a question about something, this is what I do. I help people down the path of understanding all this money stuff. So you got to get some education, got to build your foundation. If you start then building on that foundation, understand that equities the stock market, having specialized knowledge in this area is a great place to build wealth. It's a great place to build wealth. I have, you're not going to be able to see this on Instagram, but I'm going to share this on Facebook and LinkedIn and YouTube so you guys can see it real quick. I'm going to share my screen, share this window. I want you to see this really quickly. Let me come back here. You guys can see that on your screen. This was a breakdown that I had that showed the net worth of the top 1% of Americans, the net worth of the top 1% of Americans. And it says 34% of their money is in equities, right? Equities, which means, right, businesses, ownership of businesses, other assets, and private businesses. So that's roughly 70%-ish of their money, of the top 1% of Americans, is in equities, other assets, and then private businesses. Most of those things are the forms of stocks and other asset classes similar to equities, just like private businesses. You see 12% for real estate, pensions, and consumer durables, right? But if you happen to go down to the net worth breakdown of the bottom 50% of Americans, 54% is real estate, 20% is consumer durables. What is consumer durables? It's cars, appliances, TVs, electronics, right? Consumer goods. So 70% of the bottom 50% is in real estate and consumer goods, and the top 1% is sitting over in equities, assets, and private businesses. So if you get to a place of understanding equities and understanding the private business side or the stock market side of things, there's a real upside in you being able to build wealth. There's a large percentage of people that are of the top 1% that are building their wealth in these asset classes. So it's worth you getting educated on. That is a 303, 404 conversation. Again, you can aspire to get there. Make sure all of your foundation is in place first and foremost. Then start getting a specialized knowledge. Specialized knowledge. I can't emphasize that enough. You need knowledge. If it's knowledge about a specific industry, get knowledge about that industry. Do you understand about technology? Have you worked for a tech company before? Do you understand anything about media or entertainment? Have you worked for one of those companies before? Do you know how it works? Do you understand food service or hospitality? Have you ever worked for a hotel, any type of travel company? Do you know the inside and out, the workings of an industry? That's specialized knowledge, because if you have that, then when you see a company that's doing well, or you see a potential startup business, or you see a stock starting to go up, you actually have specialized knowledge on whether or not that would be a good investment for you. Don't invest in oil if you know nothing about oil, just because you heard that was a place. Let's not do that. Don't invest in any cryptocurrency just because you heard that was the place. Like could be said, have you read a white paper? Do you know what a white paper is? By the way, a white paper is just the underlying, let's say, instructions, or what that coin is used for, what its purpose was. It's like its biography, basically, of like, this is what this coin is for, this is what it's used for, this is who built it, why they built it, what the utility is. It just tells you all the information you need to know about that cryptocurrency or that coin. So it's important. It's important to learn those things if you're going to start investing in them. That becomes the thesis and the message of you being able to go out and do this. One, you need an investor mindset. Don't just think about the quick hit, the trading, that I'm just going to make some money really quickly. Those people can win in the short term, but in the long term, they don't win. They don't build wealth. So you have to have the mindset of being able to build wealth. Slow and boring. Get a specialized knowledge on a lot of this stuff. If it's an industry, if it's a specific business, do that. If it's learning how to read financials, do that. But in general, just know that this is a great place to start to understand how money works and how you can start to invest, because that's where a lot of the wealthy people have their money. Guys, what are a couple last things you want to leave the people with as we wrap up tonight? Just whether it be about investing specifically, whether it be about their mindset around investing, whether it be a specific understanding about something we talked about. But give them your last thoughts.
I think I'm going to jump in. Y'all may have noticed that I've been pretty quiet on this one. You have to understand the things in life that you don't know. And when you are in that position, you got to put yourself in a situation where you're willing to learn about the things if you want to like progress in those areas. So I guess I just want to go ahead and give a big thank you to both you gentlemen. You guys are much more informed on these topics than I am. And for those out there, like there's been a lot of like knowledge and things passed around. You've already seen some questions get addressed to both the group and Chris. We're resources like in the different areas that we focus on: health, wealth, mental, whatever it is. Like sit back, become a student, like get engaged, because the ownership is the first part. So for those that showed up today and asked questions, way to go. Chris, thanks for sharing.
Absolutely, man.
Absolutely. Absolutely. I would encourage you guys to continue to tap in. You know, Chris just said it. He's available to you at all times. It's important to get individualized if you are ready to make a move. And if you're not ready to make a move, there's nothing wrong with that. Like he said, tap into the education. You know, I prefer books and YouTube and audiobooks. That's me. That's how I take in information. There's tons you can tap into. You know, I know a lot of people make fun of him, but I think Dave Ramsey has helped a lot of people build their fundamentals, right? Build their fundamentals. I know he helped me get out of student debt, car debt, medical debt. I was right after college, I was piled up, nose high, above my head, right? Got into a car wreck. Geico didn't pay. Fuck you, Geico. Didn't pay. And I was just sitting there and I didn't know what to do. And I just like my interest in real estate was piqued by Rich Dad Poor Dad. My interest in what do I need to do? He laid out some clear steps for me. I followed them, right? But here you have a human being. That's a book. Human being that's willing to sit down and talk to you. So if you need that help, reach out. Don't let shame, as Stu has taught us, keep you from reaching out, right? And having the conversation that you need to have. Don't let shame keep you or push you into making decisions that aren't best for you. Okay, it's okay to take it step by step. You're not missing out on anything, because if you take the wrong step, you're actually taking a couple steps backwards. So I would highly encourage you to do that. And while you're doing all those things, go ahead and take care of your health as well, because that is currency. That is true currency, right? And we're going to have this conversation another day.
It's like we have to. Dana said this is very good information. Thank you, Dana. Thank you for everybody that jumped in. Again, a lot of times in this financial space, there's not blanket advice that we can give. It's not like, yeah, if you do this, you're going to be good. Everybody's a little bit different. Everyone has a different tolerance. Everyone has a different level of information, financial IQ. So it's all different. It's all different. But just know that you can win this financial game too. You can build wealth. You can get the information and the knowledge that you need and start practicing and building the habits that can help you get to where you need to be financially. I believe it's everyone can do it. Everyone can do it. It takes some discipline, it takes some knowledge, but everyone can go out there and do it. And that's what I want to be able to help you with. I know that's what the boys are here for, right? It's really to be able to be a resource, to help you get to that next level in life. And again, just to remind you, January the 9th, 2022, it's Sunday. We are coming to you with our 2022 growth event. We're going to give you all the access or all the places that you can find us and reach us and sign up for the event, get into our Facebook group, all that stuff. We're going to have that information for you, but that's coming up in January 9th, 2022. Share that, talk about that with a friend or somebody that you know that maybe wants to get some coaching or knows that they want to get to the next level financially and don't know how to, or in life in general, don't know how to get there. We're here to help. We're here to
Yeah.
help.
To piggyback on that, we are going to have a VIP package associated with that. We mentioned that in the pregame. So anyone that has been wanting to be coached by either Kabi, Chris, myself, but for whatever reason you're not quite ready to go full one-on-one, it's going to be a group coaching opportunity. You're going to get to spend about a month with each one of us. And there's going to be some other folks there that you get to grow and experience starting off 2022 and kicking ass with a group of people, getting to, have exposure with us. You've already seen us on here, but if you want to like have that introductory, I think this is so perfect for those individuals that have not yet tried out one-on-one coaching. Begin to experience that here with us. It's going to be a very, very good deal for the time and energy that we're putting into it.
That's right. That's right. And so until next week, we're going to wrap up for this week of The Good Life. Tap in with us next week, and you'll be hearing from us. Again, if you see something that you can sign up for, jump into our email list or something, go ahead and do that this week. So we'll check in with you guys next week. All right?
Amen. Later, guys.
Later, guys.